Let's now turn to crypto with a focus on Bitcoin and that sell-off that we have seen over the past few weeks. Last week, Bitcoin briefly tumbling below 63,000 US dollars before regaining some ground. So, what is behind these moves? Joining us, Bisher Khudeira, Chief Operating Officer at Stormrake. Bisher, welcome back. Good to see you. So,
thank you for having me.
You're saying perhaps this is more mechanical rather than the fundamentals that we're seeing here that's driving these prices down lower.
Yeah, correct. I mean, I know I've been speaking a lot on the benefits and exalting Bitcoin over the last few months, joining the AusBiz cross, but we've seen a significant unwind in leveraged positions. We talked about the yen carry trade being the onset of what has caused a lot of this sell-off, because there was a big spike in Japanese bond yields and they continue to climb overnight, which is putting a lot of funding pressure on liabilities, because again, they've gone leveraged to the hilt, borrowing against the yen, and now that the borrowing costs have come up significantly, they continue to have to sell assets to meet those liabilities. And again, we've seen a softer US dollar against the Japanese yen as well. We know that's causing a lot of pressure on the yen trade, because most people are getting long against the yen by shorting it, getting long on USD, going out and buying US technology stocks, going out and buying Bitcoin, and buying other cryptocurrencies. Why I say it's a bit more mechanical than fundamental is we've seen a large number of IBIT options come into expiry as well. So what has happened is that IBIT recently was one of the world's largest Bitcoin ETFs. A lot of Bitcoiners have been depositing, and I'm talking legacy Bitcoiners with 1,000+ Bitcoin stacks, going in and depositing the Bitcoin into the ETF in order to avoid any sort of tax implications, and then farming the yield via options, whether they be selling calls or selling puts, in order to generate income against their Bitcoin stack. Now what's happened is that there's been a lot of delta hedging going on. It was a suspected gamma squeeze was meant to happen in January just because of the sheer amount of Bitcoin calls that were sold. But what has ended up happening is that there have been a number of funds that were actually long calls, and then what they've done is they've had to end up going through a whole process of selling spot Bitcoin in order to cover their positions, because a lot of these funds are delta neutral. So they'll be doing things like buying calls and selling spot. And as the calls continue to roll over and not be rolling over into any meaningful profit because we continue to sell off, that then triggers further sell-offs in the Bitcoin spot price as they have to sell the underlying asset. So more mechanical than fundamental. Then you obviously get retail exacerbating the issue by piling in and selling bottoms, and then before you know it, we get a reversal to the upside.
And Bisher, when we take a look at those digital asset treasury firms, think of Strategy, for instance. What have we seen there with, when you talk about potential crisis perhaps, given the collapse of the market and or their market net asset values having fallen? So what have they had to do as a result?
Yeah, so what is happening previously with these Bitcoin or digital asset treasury companies is that when the MNAV was positive or higher than 1, it meant that the company was worth a lot more than their holdings. And so what ended up happening is it was creating this bit of a positive flywheel effect where people would buy the shares, which would give them more ability to go out and buy more Bitcoin, which would then increase the company value, which would then go on to continue to increase the multiples in which it was trading the company itself. Strategy, for example, being the largest example, trading many multiples over its net asset value, which is the value of the Bitcoin that it's holding. Now it's actually slightly below its net asset value. And what they have stated in previous earnings calls was that if Bitcoin or the Bitcoin value was to be more than the company, they would sell down Bitcoin holdings in order to be able to bring the company value back up to par, to be one of its, so that its holdings was worth as much as the company. And so that's a really tough position to be in as a Bitcoiner, to hear one of the largest holders of Bitcoin, Saylor, controls about 3% of the supply. He's always saying never sell, which is a true idiom of the Bitcoin markets, is the hodl mentality. But unfortunately, if he is forced to do so, not by his own decisions, but based off what his shareholders are expecting, he's not going to go out and commit securities fraud and say that, okay, I'm not going to do that because I'm never going to sell the Bitcoin. He's going to sell the Bitcoin to protect the net asset value and the company from being too heavily diluted and going to zero whilst they've got a multi-billion-dollar Bitcoin treasury on their balance sheet. So that's a big concern.
Bishop, does this then expose essentially the digital asset treasury model and the flaws that belong to that model? And if so, then are we likely to see a significant shakeout?
Yeah, possibly. I would say that a significant shakeout, which would take us to 30,000 US dollars, is priced at around a 55% probability, which is showing up in the options chain at the moment in the options markets. But the likelihood is getting further and further away from being true. It does, however, point out a massive flaw in the Bitcoin digital asset treasury model, but that flaw isn't due to Bitcoin itself. It's actually a flaw of leverage. So leverage when markets are going up are massively positive. Everybody thinks that they're the smartest cat in the room. Unfortunately, when leverage works against you, when the volatility hits, it exacerbates and magnifies losses. So it's actually just a prudent lesson in risk management and not a reflection on Bitcoin's core value proposition as a peer-to-peer electronic cash and as a alternative form of money. I think it's succeeded exceedingly well in doing that over the last 10 years, and it's in short 17 years of history. But unfortunately, people can use this digital asset to get access to leverage, to be able to do things like create these positive flywheels that work in uptrends, but can be quite detrimental during downtrends. But again, I just want to make a distinction between that being a commentary on Bitcoin. It's just Bitcoin is a digital asset. You can do with it as you please. It's just more of a comment on reckless leverage than anything else.
So just briefly, Bisher, what's it going to take then to turn this around as far as the trends we're seeing?
Well, the macro backdrop continues to be quite accommodative. So we're seeing a softer US dollar. We're seeing a bit of a risk-on environment and a potential growth out of debt approach. So the US government has two paths in which they can explore in order to grow themselves out of this deficit that they have, which is $38 trillion in national debt, and it's growing every year by about $2 trillion. So what they're going to do is they're going to either lower interest rates, make it easier to have the interest repayments come through, and then grow their way out of it through AI, robotics, and crypto, which is why you hear President Trump constantly exalting that, America will be the AI capital of the world, will be the crypto capital of the world, is in order to grow their way out of this massive debt bubble that they've got themselves into. And by driving interest rates down and driving down the US dollar value, you can be able to make the repayments a bit more manageable over the next few years. So both of which are incredibly positive for Bitcoin, because Bitcoin has been seen as a high beta technology growth asset. And if they're going to pull on the lever of growth and they're going to pull on the lever of reducing interest rates, both of which have historically been quite positive for Bitcoin, that's going to be the catalyst that's going to send us a lot higher.